Great opportunity. Thanks, Catherine.
Terry, let's talk a little bit about this. Why is this spin-off happening now after a decade of consolidation?
I think the principal reason is shareholders seem to demand more returns from these companies. Dividends, appreciation, share buybacks, the list is quite long. I think the issue is that boards are under pressure, and also the fact that they're looking back and say where their high return on equity is or could be. They are reclassifying their asset base and geopolitical risk, and as well as whether they can actually do more inroads into the sector. Like BHP talks about iron ore, copper, coal being their principal interests, and because they can expend more, they can get more capital out of it, and focus more on their management talent, and the other ones maybe don't fit in terms of the cost curves, may not fit in terms of management issues or geopolitical risks. So I think that's the principal reason, Catherine.
You know, Terry, from what you've said, it sounds like it's the right move for management to make. At the same time, though, it seems as though it's really being pushed through by shareholders. We've seen a lot of that lately. I guess one of my questions to you, though, would be, are you seeing too many company managements perhaps doing the right thing, but at the wrong time?
I think the management in mining sector seems to be very much, I'm not going to say fashion, but time sensitive. As you said, 10 years ago, 15 years ago, buying assets were the way to go. Now is the which assets we want to have in our balance sheet and also income statement, and which geopolitical areas we want to focus on, and where we can expend more. There's also in the background of this, Catherine, is the issue of which sector going to outperform the other one in terms of the key commodities, in terms of demand, cost curve, and as well as the other supply sources. There's a lot of internal evaluation going on, and I think the result we're seeing is that not every company is selling the same asset. They're selling different commodities to the marketplace and diversifying. We've seen cases from Barrick to Rio Tinto to possibly Anglo American, and all the way down to BHP, which is not a surprise.
You know, Terry, you're right. I mean, you're seeing these asset sales take place, and they're of all different types of commodities. If you were out there in the marketplace looking to buy, and there are some of those individuals out there who've been running some of the big mining companies, McGill is one name that comes to mind. Where do you think is the right place to be putting your bets? What's the right buy here?
You know, it's like the typical investors, Catherine. Everybody has a different risk profile and taste towards sectors. I think you're going to see Mick Davis, Xstrata, at the time, he focused on assets whereby most people wouldn't look into or pay extra money for, and he did very well. And Glencore today is the owner of most of the assets. And Aaron Region is looking for assets out there. Agnelli of CVRD Valley has been looking for assets. There's no shortage of this. Plus, there's an appetite for the investor. Sometimes investors, if they believe the commodity price is going to go up, they should buy the higher cost assets, not the lower cost assets. At the margin, higher cost assets do better than the higher commodity prices. There's a different investor profile and risk profile here combined, which will make the case interesting. But the question really is, what prices companies going to get for this? And number two is that what's the appetite of the bankers that are staying away from a lot of geographical borders, and that's going to continue for a while.
Terry, we'll leave it there. Great to see you. Thanks so much for joining us with your views today and insights.
Thanks, Catherine. Good to see you again.
Thank you. You too. Thank you. That was Terence Ortslan, Managing Director of TSO and Associates.
Thanks, Terence. You're clear.
Thanks, buddy.